Investors have enjoyed bull market for the ages, but many Americans have been left out. Washington, the U.S. stock market is set to conclude the decade near record highs, a financial boom that emerged from the wreckage of the financial crisis but left on the sidelines the millions of Americans without money to invest. The Standard & Poor's 500 index, which tracks the biggest American companies, has enjoyed a total return of about 256%, or 13.5% annually, since the beginning of 2010, according to Howard Silverblatt, senior index analyst at the S&P Dow Jones Indices. That compares with an average annual total return, including dividends, of 10.3% since the 1920s, he said. That means someone who had $10,000 in the S&P 500 at the start of the decade will end it with close to $36,000. In 2019 alone, investors are set to see a total return of more than 30%. The stock market has contributed to a high degree of economic satisfaction across America, on top of a very low unemployment rate and modest but steady economic growth, surveys show. People who got into the market early in the decade, or even joined more lately, will have seen their retirement assets, college savings and other investments increase measurably. If you owned stocks, bonds, real estate, hard assets, you benefited, said Michael Farr, president of Farr, Miller, and Washington, an investment firm in Washington. Prices on everything from parking lots to publicly traded equities went dramatically higher. Yet not only did the prosperous decade leave many Americans behind, -52% of Americans own stocks, largely through retirement accounts, according to the latest Federal Reserve data, it also fits into a much more uneven economic picture. Jared Bernstein, a senior fellow at the left-leaning Center on Budget and Policy Priorities, acknowledged that people who owned stocks did well. But when you are talking about the equity markets, you are talking about the top half of the population. The bottom half of households don't own stocks, he said. Emerging financial challenges such as the explosion of student debt, and until the past few years highly disappointing levels of wage growth, meant many Americans may have had less to invest in the first place. Unfortunately, the bulk of investors don't have enough money in their retirement accounts to retire on, even though they just lived through a fantastic decade, said Daniel Weiner, chairman of Advisor Investments. In addition, Americans who sold in the financial crisis of 2007 to 2009, or lost their home to foreclosure, would not have had as much of a chance to take part in this decade's boom. Retirees who shifted money into fixed income accounts saw paltry returns as interest rates sat at historic lows. People who retired and thought they would live on their fixed income have become Walmart greeters because the income wasn't enough, said Na. For more on this story, visit the news article link.